Alrighty, folks, as promised in the school community, we've got the one and only Mr. Dan Bird. He obviously talks a lot about stocks, a lot about the market. We often don't agree, but we always appreciate each other's feedback. What we're going to do for this particular episode is we're going to go into our normal talk track for about 20 or 25 minutes. But please remember, if you are here today, you can ask about any stock, any situation. Dan is always open to digging in, looking at charts for you. So I hope all of you take this opportunity to ask questions. And if you are a dad, a father out there, happy Father's Day. We are recording this on Father's Day. And Dan, let me just be the first of many, I'm sure, to wish you a happy Father's Day.
Thank you. Yeah, we have two grandkids coming today. So
Oh, you got
I'm
the
in
whirlwind
Florida,
coming.
so it's like our hurricane coming.
You got
Two,
grandkids equal hurricanes.
two and four.
Oh, yes, 2 and 4. Yes, yes, yes.
Yeah.
Very, very cool. All right, folks, remember you can raise your hand or put in the chat any stocks, any portfolios, anything you want to ask, economy, inflation, Fed, all of that. We will make sure any and all questions, we will stay on as long as the questions are. But Dan, why don't we get into it? We got Fed Day this week. We obviously had Israel and Iran's, uh, you know, uh, spin up over the last 72 hours. Oil had a chance to react on Friday, up 8%. 10-year note surprisingly went up 5 basis points. What say you, and what are we set up for Monday morning? Any early thoughts on where all this goes?
Yeah, so that's a lot of territory to cover. I actually had one person on my YouTube channel. I'll show the site here in a minute, but asked me what happens when something like, the attack on Iran occurs. How do your how do you interpret charts when that happens? Well,
Fair
of
question.
course, the charts do not predict. Number one, they are by definition lagging indicators. So they show you historically what's happened with the market, but in general, the market runs on earnings. That is the primary driver. However, other events will affect it,
Yep.
and those events usually are short-lived. They don't last very long. We had a big downtrend on Friday. I expect it to continue next week, not necessarily because of that attack, but because historically that's where we're set up right now. We're set up to pull back. So I was looking for an excuse, looking for a catalyst, and you got the catalyst on Friday.
Yep.
Next week is options expiration, and usually that is a volatile week when that happens. There's something called max pain. Max pain is basically where all of the options balance each other. The puts and the calls balance each other, and causes the maximum amount of pain to options holders. So the point at which they all expire worthless. So options holders lose the most money, and market makers make the most money.
Yep.
That's what happens during options expiration week. And you can just generally think if the market had been going up, then that week usually will be the reverse.
Mm-hmm.
So next week it should go down.
Okay.
And usually it's at the end of the week and carries over into the week after. So I expect next week to be a down week
Okay. I like it. And again,
for lots of reasons.
you would have likely said that regardless of what happened on Friday. It was
Yeah,
just that's why
I
the
would have
chart.
said it would be down regardless. I'll show you something here in a minute where on my YouTube channel on Wednesday, I said the market does not have much more left to go. I said there's probably 1 or 2 days. I said it on Wednesday after the close.
Mm-hmm.
I said Friday is the maximum. That's the most it could possibly go up.
Right. You were just talking about the market being exhausted.
Yeah, I was just talking about what the charts were saying, and
Mm-hmm.
I'll show it to you in a minute. But so the attack was a catalyst, but the market was ready to do it anyway.
Yeah. Did anything surprise you in the reaction? I mean, obviously, oil going up is kind of a no-brainer. Going up 8, 9, 10%, a no-brainer. Some people are calling for oil to go up to $100 a barrel. Somebody even said 130 if this skirmish continues much longer. Is any of that kind of any thoughts on that?
Um, yeah, oil is interesting. Oil is probably one of the most manipulated commodities on the market,
Sure. Hmm.
and oil companies would like for the price to be somewhere between 65 and 80. somewhere in that range. That's the
Yep.
sweet spot. They don't want it to be lower than that because then they can't invest in drilling new wells, and they don't want it to be higher than that because it affects demand.
Yep.
So sweet spot is right in between 65 and 80. So if it goes to 100, that's going to have an effect. It will have an effect on the stock market. It will draw liquidity out of the global economy, the global market, and liquidity is what drives stocks.
Well,
So
the other thing it will do is it will take, well, it could be a catalyst for inflation, right? And oil is in
yeah,
everything,
yes,
demand destruction, but
right.
also it will further delay any Fed rate cuts. I mean, let's just be honest. If oil goes to 100, it's not my call. I'm just trying to play out the scenarios. That will be inflationary. That will ripple through lots of things, and that will delay any Fed rate cuts even longer. Is that reasonable?
Mm-hmm. Yeah, I don't think the Fed really wants to cut anyway
Yeah, true.
for the whole year. They can get by with it.
Yeah,
So,
yeah.
I mean, the other side of that is oil going up like that, going that high. Yes, would be inflationary, but also would be potentially recessionary.
Oh yeah, demand destruction for sure. Yeah. Hmm.
Right. So you got two opposite things going on.
All right.
So
Well,
I
well,
don't
you
think
wanted
I
to
don't think the Fed wants to cut. I don't think they're going to cut in June.
no,
In next
no
week,
chance in
actually,
June. Yeah,
next week.
Wednesday. No chance. Zero. Yeah, no chance. All right. Well, you said you wanted to show some historicals. Why don't we bring it up and
Okay,
take a
yeah.
look at that?
This is a few things from Stock Traders Almanac. Can you see my screen?
I can. Thank you.
All right, this is my website,
Hmm.
breakpointtrading.net, and my YouTube channel is right up there in the upper right. And the free newsletter is in this little box right here.
Hmm.
So what I want to show you is this is June historically. This goes back to 2004, so roughly about 20 years.
Hmm.
And the dash lines are post-election years, which is what we're in this year.
Yep.
All right, then that goes back to 1950, so it's still about 19 or 20 years because
Hmm.
these are every 4 years back to 1950.
Got it.
And we are right here. And notice what the trend is over that
Yeah,
period.
that would be
All
down.
right. Yeah, so the trend is down until the last week of June. Last week of June, historically, the market goes up until July 15th.
Hmm.
And I did an exercise. I actually did it here on this channel a couple of weeks ago
Hmm.
that I went back every year to 2017 for just that period. The last week of June till July 15th. Every single year, it's higher during that period. All
Interesting.
right. So historically, we've got, the next week is going to be down, like I just said. We got the Fed meeting right here on Wednesday.
Hmm.
Oops. And then we've got options expiration on Friday, and we've got a holiday in between.
Yeah. One of the things, let's talk about the Fed meeting real quick, because again, that's going to be market moving, not necessarily the decision, because I think there's actually 0% chance they cut or raise, frankly. But what's Powell going to say in front of the microphone? I think that's going to be must see TV. Also, it's June, so I could be wrong, but I think this is where we get a new SOP, sometimes called the dot plot, where they
Yeah.
talk inflation, unemployment, cuts. It's going to be interesting to see where the Fed is, and who's. I guess most interesting for me on the dot plot is going to be when's the first cut? Is it September? Is it December? And how many Fed presidents say zero? Right. That's
Mm-hmm.
been my call all year. So what do you see coming out of Wednesday?
On the conference call, on the Q&A part of it, I think it is going to be a lot of there are too many moving parts. There are too many things going on. We don't know. We are
Meaning,
prepared to do what it takes. If we need to cut, we'll cut. If we need to raise, we'll raise. I
mhm.
think it's going to be very ambiguous.
Yeah, it'll be Fed speak 101. Just a
Yeah,
lot
yeah,
of things.
because there's lots of moving parts right now. Lots of things
No,
going on.
yeah, and then let's talk about inflation. A lot of people expected inflation to ripple through to CPI and PPI last week. It did not. Each of the readings, both month on month, year on year, were better than expected, or at least 7 of the 8 variables were better than expected. Is that just a sign that the tariff impact hasn't shown up yet and we should expect something next month? Or are we just seeing suppliers and whatnot kind of eat the margin, and it's not rippling through the consumers?
So this is a little sensitive topic, and you and I have discussed this in the past,
Mhm.
and I've said it in other places too, and got lambasted by people. But I've been saying it, ever since. Well, what was the tariffs really
April,
started beginning of
April,
April. So I've been
yeah,
saying it since February or March.
yep.
Tariffs are not inflationary.
Yeah, so let's break that down because again, technically correct, right? Inflation is a rate of change. It's not a step function. So by
Right.
saying tariffs are not inflationary, it is technically correct, but extremely frustrating to the average person who doesn't know the
Yes.
definition of inflation. Because
Yes, it
without
is very it
question,
is very frustrating because intuitively you would think that tariffs are going to raise prices and that will cause inflation.
yeah.
But that's not
So
how it works.
yeah, so again, so if we go to the person on the street, yes, tariffs can mean some goods go up, some goods don't, but it's a step function. It's a one-time event. It is not a rate of change accelerator. And inflation is a measure of rate of change. And again,
Yes.
it's one of those topics where you could get into the quagmire where you have somebody who knows what they're talking about and then somebody who's emotional, and it just goes nowhere, right? Nobody is in a better place for the conversation. So
Right. Yeah,
I think
that's
there's
right.
that saying, I don't argue with stupid people, I just say they're right. So I just move on with these conversations. It's like, who cares?
Yeah,
You're not
like
listening.
Mark Twain once said, never argue with a fool because bystanders don't know the difference.
Exactly, exactly. So anytime that passion comes out of somebody, I just thank them and move on because they don't want to listen. But that
Yeah,
said,
but let me add a little bit to that. Not
sure.
only is it a one-time event,
Hmm.
but it also creates a change of choice.
Correct.
So,
It's
and there's
switching
lots of
costs.
examples, but a simple example is if you put a tariff on French wines and people go to the store and French wines are way more expensive, then
Yep.
they just simply buy California wines,
Exactly. Yeah.
which are
Yeah.
cheaper, right? So
Yep.
that does not cause inflation.
No,
It,
no,
it
again,
causes a change of choice in people's
correct.
buying habits.
Yes, there are called switching costs or exclusions, or there's lots of that. The economy is very complex. Tariffs do not cause inflation. It's not a rate of change event. However, it will change economic behavior. And something I have called out since Liberation Day was demand destruction. I
Mm-hmm.
think I think what most people are failing to realize is the uncertainty, and all of this has caused demand destruction. And if you have enough demand destruction, you can actually not only get disinflation, but you can get deflation, which I think is
Right.
going to shock a lot of people.
Yes, which is what I've said the potential is for
Yep.
deflation at some point.
Hmm.
So it's surprising as we move along through this and we get more reports every month. We get a new CPI number, and that
Yep.
CPI number continues to come in lower. I mean, people won't be able to deny anymore that tariffs are not inflationary.
Well, well, I am not convinced that the next inflation reading won't be bad. Right? You and I have been talking about the base effect all freaking year. We have pointed to these 3 months being the worst of the worst, and the numbers next month could absolutely be worse than expected. And you and I both know it's not tariff related, but let me just tell you this: everybody will be screaming tariffs.
Yeah, that's true.
So
That's true. I mean, I thought because of the base effect, I thought it would happen this month, frankly.
yeah, and it didn't.
I did not expect it to go. I thought it might be flat or maybe a point higher,
Yeah.
but I didn't expect it to go down.
Yeah, it was a surprising reading, and again, I think it actually highlights switching and demand destruction. But we're going to know
Right.
for sure next month. Next month is the one that's the negative number, and
Yeah.
we're going to find out in about 28 days just how bad it is.
Yeah. But by the way, after that, the numbers get much
Yeah,
better.
well, 2 months, but
So
yes,
after
yes,
so after after next month and the month after that, so July and August,
yep,
going into the
right.
fall, the numbers get much better. So
Oh no,
inflation will look like it's dropping
oh
off a cliff
absolutely,
again.
oh absolutely. There's a very good chance that we're below 2% by the end of the calendar year. There's a
Right.
very good chance.
Yeah.
Absolutely, absolutely. Well, let's do one more thing about again the Fed's
Uh,
job, and that's the job picture. I think the job picture is a lot weaker when you dig behind the surface level, right? I think the last job reading was 157 or something, better than expected. But man, 600,000 full-time jobs lost, participation rate falling, not going up. I think and then, oh, by the way, the weekly unemployment now is 4 weeks in a row going higher, currently at 248. I think the
Yep.
job market is a lot weaker than people think.
Yeah, I think that's probably true. I think it should be expected that it should be weaker. It's not spiking, but it is definitely getting worse. And if it starts to spike, then that's going to cause the Fed to cut that. And I said that all along. I think the jobs number is the thing that's going to cause the Fed to cut, not anything else.
So I want to just dig on that a little more because I like to put numbers on it. When you say the jobs, so it's the unemployment rate. Is that the thing that if that spikes, that's what causes the Fed to cut?
Yes, the unemployment rate.
Yeah. So the last reading was 4.2. So you're thinking, is it just a rate of change again, or do we have to see some number over 5 or
over 4.5? I think.
Oh wow, only 4.5 could get the Fed to cut. Oh, I'm not there. I don't believe.
Well, no, I'm not saying to get the Fed to cut. I think when it gets to 4.5, it's going to start to accelerate higher.
Okay.
And the Fed knows that. I mean, you can see right here, these are the recessions, these gray areas. Let me make this a little bit bigger. So these are recessions, and this is the unemployment rate. So you can see back here where these little arrows are. So that's where it starts to spike. And this red line here is 4.5.
So the Fed knows, historically speaking, when the unemployment breaks a little, it breaks a lot, is what you're saying.
It breaks quickly.
Quickly, yeah.
Yes.
Okay.
Once it breaks very quickly. You can see how it just basically goes straight up.
Yeah, parabolic.
Once it starts to accelerate, it starts to go straight up, and that's when we get a recession.
So the 4.5 is the litmus test for the Fed to really start paying attention. Okay, I can buy that.
Yeah.
All right.
Yeah, that's what I think. Right. And we're at 4.3 right now.
4.2, 4.3, something like that. I think 4.2.
We're at 4. Yeah, we're at. Let me see. I can tell you. Let me look at a different one. You can look at the claims right here too.
Claims have been bad for 4 weeks in a row. Look at that.
Yeah, we're at 4.2. Yeah, 4.2. So there's just added another one. So claims now definitely, you can see month over month, they're definitely going higher.
Yeah, looking at the chart, I hadn't seen this. I mean, I've seen it a lot, but I haven't seen it since last Wednesday. If you have to go back to May and June of 23 to get a successive, kind of jump.
Yeah, back here.
Well,
actually, May and June of 23, right through here. Yeah, exactly. So you can see the moving averages. The red one is a quarterly, and the green one is an annual moving average of claims. So when the quarterly if the quarterly is more than the annual, then that's when it really starts to spike. So it happened right here, then it went back below, and it's happening right now. Actually, this month, it's when it's just started to go back above it.
Yeah.
So this is the piece right here, and we'll get another one. We'll get some more of these because these are weekly, but we'll get another unemployment report at the beginning of July. And I expect it probably to start ramping up. So yes, we're at 4.2 right now.
Yep.
So, I mean, 4.3, 4.4, 4.5, it's still got a ways to go.
Yeah, it typically doesn't move in big chunks. So, okay. So we're watching that. Why don't we get into what happened on Friday? I want to look at oil and 10-year and Bitcoin or in gold, right? Those are the 4 things that kind of had reactions. One of them was a surprise to me. What happened?
Yeah, first let's look at the market.
Okay.
And this is the home page, the S&P right here. And this is what I was saying before, that the market, and I said it on Wednesday, the market only had about 2 more days left to go up. These dark blue lines right here is called a bearish wedge. And every Tuesday I do a training class, Technical Tuesdays. I teach people about technical analysis and patterns and things like that. Bearish wedge typically will break to the downside. It basically means that the highs the higher highs are coming in, and then the lows are meeting that. So you've got You've got higher lows and higher highs, but they're all coming together in a little
Got it.
point up here,
Yep, I see it.
right? So on Wednesday of last week, that was this red bar right here. I said, we're trying to break out, but we're not. We can't break out. And Thursday we tried again and couldn't break out. I said, there's only room in here for one more day.
Hmm.
And then something has to break. Either this thing's going to break out and we're going to go back to all-time highs up here, or more likely, bearish wedges usually break to the downside.
Got it.
And that's exactly what happened on Friday.
Yeah,
Now the question is, what happens from here?
Right. Okay.
So typically it will continue. These green line and red line, I'm beginning to put this on here every week. This is the expected move from the options world. So the expected move to the upside is 6,100. Expected move to the downside is 5,850.
Got it.
I think 5,850 is more likely.
Okay.
So oil.
Yeah, let's look at oil first. Oil reacted exactly as I would have expected, given the
Yeah,
conflict.
right. Definitely, oil definitely should have gone up. Let's see. Let's try it this way. So there's a big, huge spike in oil right there.
Mm-hmm.
You can see it right there. Still not back to the high though.
Okay. Yeah.
Beginning
So
of 20.
again, is there anything you can decipher from a chart like this, or this is all external events, and we'll see what happens Monday morning?
This is well. First of all, the chart had been going up, so oil was on a run to go higher.
Mm-hmm.
This is a weekly chart going back 5 years, and you can see the high is back here. So 92.
Mm-hmm.
So 92 is where the high is, and basically the channel that it's at is about 83. It's almost there right now.
Okay.
If you just drew a line across the tops right here at about 83 and across the bottoms right here at about 65. What were the numbers I said that the oil industry likes?
Yeah, it said 65 to 80, I think you said.
65 to 80. That's the sweet spot.
Right. Okay.
And the oil industry will keep it there as much as they can.
Yeah, because one of the things that I see coming, and again, it'll be interesting, if oil shoots up another 10%, so it goes from whatever it is, 81 to 90, at some point, Saudi Arabia is going to say, okay, great, we'll turn it on for a little while, and that will calm things down. I don't think oil goes over 100. If it does, it won't be over 100 very long.
Yeah, I agree with that. I think the oil industry won't let us stay over 100 very long.
Okay.
I think the energy sector has been actually doing really well lately. I go over here to the charts page, and I actually pointed this out. I do an afternoon midday update on the market. Mm-hmm. On YouTube. I do like 7 to 10 minutes. And I look at the sectors to see what they're doing. Notice the energy sector, everything in green are the top 10 for the week. Top 10 industry groups for the week. And energy is the clear winner for the week. So energy actually had come down a lot, and now it's starting to ramp back up. Go back to the high.
If you take out Friday's events, energy going up probably is an indication that a global recession is off the table. That's what energy or oil was telling us, right? We were getting more expansionary. Yes or no?
As long as it stays between that 65 and 80 to 90 range, mm-hmm. Yes. If it goes up above 90 and stays there, then recession is back on the table.
Got it. Okay, makes sense.
The other thing that oil has an effect on is global liquidity. Mm-hmm. So if oil is lower, I actually created a chart for liquidity. These are the liquidity component, or some of them. One is oil. The two key ones are the US dollar and oil.
Got it.
So if the US dollar is going down, most countries their debt is denominated in US dollars. So if they want to refinance their debt and the dollar is cheaper, then that gives them more money, makes it easier to refinance. That puts liquidity into the global system. If oil, of course, every country needs oil to run its industries. So if oil is cheaper, then they have more money. There's more liquidity in the system. So those two are really important. And it usually takes 10 to 12 weeks for when these start to drop, that it shows up in the market. So here's the downtrend that we saw from February to April. Mm-hmm. These two blue lines are the 12-week period. So it's where the US dollar and oil started to drop, the beginning of it. Mm-hmm. And right here in the 12-week period is when the market started to rally back up.
Yep.
All right. So oil going up will hurt global liquidity, and commodities too are starting to tick back higher.
Yep.
That will, and global liquidity will affect the stock market
for sure,
because people won't have as much money. Hedge funds, large institutions won't have as much money to invest in stocks. So it will, but it's about a 10 to 12 week lag time.
Delay. Yeah, lead lag.
Right. Yep. So it will affect it. So if you think about that, let's say right here, which is April 28th is the low for oil, dollar still going down.
Yeah.
But roughly April 28th, that puts us roughly right now. Right now is 6 weeks. So 10 weeks is probably the end of June. Okay. Or middle of July. 10 to 12 weeks, middle of July. That's when we could get the rally. I think from the middle of July until October, till the fall, we're going to have a very difficult time in the stock market.
Yeah, you've been telling us that's going to be time to be careful for quite a while now. Remember, folks, you're going to get the opportunity to ask Dan about specific stocks you have or interest in. At this point, I only see one stock symbol. That's from Kenny. We'll get to that in a minute. But again, rules always apply with me. First come, first serve. So put your stock symbols or whatever. I've got a few more topics for Dan before we bring up your question. So
let
Dan,
me cover a couple of things first. Also on history. This is also from Stock Traders Almanac. So they put in what the current. This is the historical trend down here, back to 1950. And this dash line is where we are right now. And I put in, because this just goes to the 11th, not the 13th. So I added in where we actually are for the 13th.
Oh, okay. That makes sense.
So you can see, just like I said before, up until the last week of June, it's a down market. From the last week of June until July 15th, we're going to get a little bit of a rally. If we compare this to the 2018 trade war, there's the comparison.
Oh, interesting.
2018, we were down 20%. This time we're down 21%. There's the trend going higher. You can see where we are in each of these. You can see we're in this downtrend period right over here.
Yep.
That's where we are right now. Interesting. So I think the end of the year, we're going to be back to all-time highs. Just to be clear, I am not saying the market's going to crash. And then one last thing that is really interesting, back over here, this breadth thrust. I showed this.
Breadth thrust.
I showed this before on here, but this is a binary chart. So what that means is two things have to occur, and when they do, it gets a spike, but it's a one-time spike. Okay, so the things that have to occur is that the advancing issues versus total issues. Let me turn this thing off. Advancing issues versus total issues has to first go to an extreme, spikes down to an extreme, and then within 10 days spikes back up to an extreme. It's only happened 8 times in 20 years. And that's these pink lines right here. So the pink vertical dashes.
Got it.
You can see it's only happened 8 times in 20 years. And the last time it happened was the beginning of April.
Interesting. Okay.
And if you follow this up, it's usually the bottom. There's usually an extended uptrend after that happens. Okay. This is the only time that we actually had another lower low after that. And then we had an extended uptrend. Okay. But every single time in the past, it's the beginning of an extended uptrend.
Very cool.
All right. Keep that in mind. And then here's the data. Here's the actual data for when those things happened. This is the results. And this one actually goes back even further. So there's 11 of them in this case, back to 1982. 6 months and 12 months later, 100% of the time, the market is higher.
All right. Very
All
cool.
right. So keep that in mind. In addition to us being in a secular bull market, which I've talked about over and over again,
Mm-hmm.
we are still that this rally is still not over.
Yeah. Well, I've got three more topics I had prepared today to bring up, and then we'll get to the questions from the folks. So we talked about oil. Gold is next. Gold behaved exactly as I would expect it, but why don't we take a look at gold real quick?
Yep. There's gold. Still
Yeah.
not back.
Yeah.
Still not back to the high from April 21st, but certainly trending higher.
Yeah.
But it's at all-time highs.
Mm-hmm.
There's a weekly chart. Here's a
Yeah. What?
monthly chart.
Yeah. One of the things I'm interested about gold in my next topic, the 10-year note, is historically speaking, treasuries have always been the flight to safety. If you go back and look at, the invasion of Iraq or, all of those things, typically speaking, foreigners switch to the U.S. Treasury, specifically the long end, and that did not happen on Friday.
Right.
That did not happen on Friday. So again, I've talked about things behaving as I expected. The 10-year notes behavior was exactly the opposite of what I expected. The fact that the 10-year note rose, I think it was 5 basis points, maybe 6 on Friday. I don't know if it's signal or noise yet, because part of it could be the reason the 10-year note is up is because the chances of Fed rate cuts go down because of oil. I mean, it could be that connection. Or if it is signal, it's just another example of foreigners turning away from U.S. debt. And that's going to be a long-term, big, gigantic problem. So I'm not sure what's going on. Did rates go up because they think inflation's coming, or is it go up because they just don't want U.S. debt? They'll buy gold instead.
Well, certainly countries and investors are buying gold for sure. And the 10-year goes up when people are not buying our bonds,
Correct.
right?
Exactly.
So
Yes.
if the bond auctions fail,
Yeah.
then countries and investors are not buying US bonds. So the 10 year is going to go up.
Mm-hmm.
And instead it went down.
Yeah.
So
We've got to be
when
really
there are global uncertainties,
Mm-hmm.
usually investors run to safety,
Mm-hmm.
and the US market is still that place to run.
Yeah, but we got to be really careful. We have believed that for so long. I actually think this is signal, and it's just another sign that we got to be really careful, because if we have foreigners turn away from the U.S. assets, even by 5 or 10%, that's just going to shoot rates higher in a big way. And again, as a real estate channel, that's going to have an impact.
Right.
Yeah.
It will.
Yeah. Yeah.
But
So
I'm going to go out on a limb here.
oh, I love this. Go for it.
And I am going to say that the 10 year right now is being very well behaved.
Yeah, clearly. Look at that. Yeah.
It's running. You can see the channel right there.
That's a tight
This goes
range.
back to 2020, back to the pandemic.
Mm-hmm.
It's just in a sideways channel, right? And the channel is actually getting tighter.
Yeah, it is. Yeah,
So
look at that.
it has been very well behaved. If it goes above 5, then there's definitely cause for concern. But
Okay.
I am going to say it is going lower.
Okay.
That the 10-year will actually go lower. And
All right.
when there are global issues like what happened on Friday,
Mm-hmm.
that's an example that
Sure.
investors still run to the US market.
Yeah, well, we're going to find out if there's any follow through in this. And again, it just behaved differently Friday. It was a snap reaction. We'll see. Let's do one more thing, and then we'll get to the questions. We will go in order. We'll go to Kenny first, and then we'll go to Jason, who's got his hand up. I want to look at Bitcoin because, again, people are talking about Bitcoin being digital gold. I also think Bitcoin's interesting because it's been trading the last 48 hours, and all this other stuff hasn't. So I think looking at Bitcoin right now is interesting because maybe it gives us a key to what happens on Monday.
Yeah, so Bitcoin put in a lower high. It made it above the 106 level, which was the key resistance level.
Yep.
But then it came right back down again. And right now it's at 105,779. I think this is updated in real time.
Yeah, I checked earlier. It's 105 something. Yeah.
Yeah. So this is a 10-minute chart right here.
Okay.
So yeah, it's this, and this should be in real time.
Cool.
So 105, 105,779.
Nice. Yeah. So again, it's
So
below the 106 level.
below the 106, and it is in a downtrending. This is actually a declining triangle.
Hmm.
So it's got a support line down here at about a little over 100, about 101,
Okay.
and it just put in a lower high.
Right.
So if it does that again, puts in another lower high, then it'll have three touches basically,
Yeah.
three
Okay.
major touches,
Got it.
and that will imply that the trend is down, is lower.
Okay. All right. Well,
So
this
the
has been a
question
lot of.
there is that so this brings up an interesting question, which I just
Mhm.
thought of. If the global investors will run to the U.S. economy because it's the biggest, the most liquid,
Mhm.
um, even though they may not like the amount of debt that we have, it's still the best one to go to out of all the other economies in the world.
Sure.
Does that mean they're pulling the money out of Bitcoin to do that?
Oh, I don't know. Yeah,
So maybe even gold is taking Bitcoin money.
maybe.
Bitcoin is still up there, but make no mistake, it's still doing really well.
Hmm.
So that 106 level is really important.
Gotcha.
We'll see if it
Okay.
can really break out of it.
All right. Very cool. Well, now we're going to get to the fun. While you all are here, we're going to get to look at your stocks, your area of interest. Kenny was the first one to put in a stock symbol. Its stock symbol, Dan, if you can't see it, is SFM. What's the chart look like?
One of my favorites.
Oh, really? There you go.
Yeah, interestingly, on the charts page on my website down here, I have a top 10 list, top 10 relative outperformers, top 10 stocks that have beat earnings and revenues, and then the Investors Business Daily top 10.
Okay.
And then I color code it for ones that are common in each of the three. And then down here, I have the large cap, mid cap, and small caps. And SFM, while not on here now, prior to this, it had been consistently in the top 10 up here.
Oh, nice. I don't even know what SFM is. Sorry.
I think it's a grocery store chain.
Oh, all right.
Hold on, I'll look at it.
No idea.
SFM. This is one that had been performing really well.
Oh, Sprouts. Yes. Okay.
Sprout, yeah, Sprouts Farmers Market. Um, and let me show you this on a little wider view. So
Oh,
all through
wow.
this area,
Look at that chart. Woo.
all through this, right back here, back in 24, it was right through here. It was consistently every week was in that top 10 list, all the way through here. And then it fell off and came up and made a higher high, and came down and made a lower high, came back up. Now it looks like a triple top.
Hmm.
So it's pulling back, but this has been a strong stock. So this, and it's below the 50. I mean, everything about it right now, I would say it could be a falling knife. I wouldn't necessarily get in right now,
Hmm.
but it's certainly one to keep an eye on.
Yeah, we'll talk about a triple top because again, I'm not a chart expert like you, but that sounds like a lot of resistance to me.
That is a lot of resistance. I'll just put a line across here. Let's put it right about here. All right, right there. Move it down right there. So three times, let's try to hit this level. That's at about 180, 178, something like that. So three times it's gone up and hit that level and can't get through it. So the way to think about this, just in general for technical analysis, is as it was going up, everybody's jumping on board. There's been lots of momentum. So everybody doesn't want to miss out. So they're all getting on. And then it pulls back. So these people are like, oh, I made a ton of money from back here. I should have got out, took my profits, but they hung on. And then it gets back up here. And these people are like, I'm getting out.
Yep.
In this case, it actually went higher. So they might not. They might have held on and said, oh, that's great. It's going to the moon and it will never go down.
Hmm.
And then we have this big, huge downtrend right there. And all these longs, all these bulls got trapped.
Yep.
Right. So this big downtrend right here traps all these bulls. So it continues to go down. And all these people now are saying, please, God,
Come
they
back
get down
one
on their
time, one time, one
they
time.
get down on their knees late at night saying, I'm so sorry. I'm so sorry. I was greedy. I should have sold it back here. I'm so sorry I didn't get out, but please just let me get back to break even. I promise I'll sell.
Yeah.
And then it does. And that's what they do. So it gets back to break even and all these people sell, get some new buyers that step in because they remember, muscle memory, remembered what it used to do. Just like me, I remembered SFM from all of that.
Yeah, yeah.
And it did it again, went down again. So now you've got all these people and some more of these that didn't get out here are saying, please God, just let it get back to break even. Right. So that's what makes a triple top.
Okay.
It's the simplest explanation.
I love it.
It's just market psychology, and technical analysis, looking at charts, is nothing more than a visual representation of market psychology.
Yeah.
That's what it is.
Makes total sense.
So now it's below all of the moving average lines. It's almost below the cloud. Inside the cloud is basically neutral. Think of it that way. It's almost below those, and the 200-day is right down here. So it probably is going to find support down here at the 200-day moving average. If it goes that low, and next week is probably going to be a down week, so 142. If this continues to go down, along with the rest of the market, somewhere around the 145 level, 140 to 145, could be a good entry to get back in. But it has a lot of resistance. It's now no longer the same chart that it was back here.
No, it's no longer the same chart, clearly.
Right. Yeah. So this now could be forming, and I've talked before about market cycles, that there's a markup period, there's a distribution period, and then there's a markdown period. And this looks to me like a distribution period through here.
Okay. Very cool. Very cool. Next up, we're going to go to Jason, who has his hand up, and after that, we'll go to Frank. So, Jason, go ahead, take yourself off mute, ask your question.
Hello. Thank you for doing this.
Of course.
I have stocks in a annuity, some Roth IRAs, and also a brokerage that I have managed by Empower. That's my big question. Should I have them managing it? I know they cost 0.89 to do that every year. They do tax harvesting and stuff. I don't know anything about stocks, so I have them do that. But a lot of people say that's not a good idea. I just wanted your thoughts on that. Thank you.
So do you work for Lockheed Martin?
No, I'm a union electrician and I own a company.
Okay. And the reason I ask is Empower manages all the Lockheed Martin money and 401k and all that. I've got a few friends, including my wife, that work for Lockheed Martin, and they're all of their money was managed by Empower. Empower does a pretty good job, actually, of managing the money, but it is expensive. Their fees are high. So and everybody has their own, how they want to invest and risk management and all that. So I can't give you a recommendation. I'm not a financial advisor. Can't tell you what to do. I can just give you my opinion. Empower, from what I've seen, is a pretty good money manager, but the fees are high. You can move it to an IRA if you wanted to, and Empower would help you to do that.
I'm not allowed to. It's actually through my retirement, through my company. Right. It's actually through Hancock.
Okay.
And then I had Empower, actually Capital Finance at the time, and then Empower bought them. Right. To tell me what to do, essentially.
Right. So because it's still in your retirement account, they won't let you move it to an IRA.
Right.
Correct.
Probably until you leave the company, go somewhere else.
Until I'm 59.
59 and a half.
Yes, you're correct.
Don't forget that half.
Yes, that's why I got into real estate. I don't want to work that long.
Yeah, that's probably a good move. So you're probably basically stuck. Do they let you move it to any other investments inside of that account?
Yes, that's what Empower does. They move it around all the time.
But do they let you do it?
I can do it. I just don't know what to do. So that's why I have Empower do it.
I gotcha. Okay. Well, they probably will do a pretty good job now. They are going to be like any company like that, like Fidelity or Vanguard or any of them. They are going to be fully invested at all times. So if the market is going to go down, the only option they really have is to move it to sectors that are more defensive. That just means that they are not going to go down as much as everything else, but they're still going to go down.
Yeah, I mean, one of the things I think about when I get questions like this is like, where do you have your expertise? And as I've been very clear with myself. That's not where I have my expertise. So in stocks. So it's like either pay them to do it, or I'm going to throw it into some just low fund ETF, because again, it's just retirement dollars I'm not going to see until I'm 60 or whatever. So at some point of the day, it's like, how much do you want to do it? Now, Dan Bird, right? This is what he loves and what he does. I'm not Dan Bird. I'm a real estate guy. So at some point, it's like, I only have so many hours in the day. It's already working. Next problem.
Yeah, all of my IRA money is I trade my IRA. So I don't let anybody else manage it. I do it myself, and I use it for trading purposes. Now this question has come up from some of my subscribers on my website. So I created something for anyone that wants to use it on the portfolios page, call it the market timing strategy, and it explains how the whole thing works right here. And the rule is basically a rules-based system. And essentially, I use a weekly, so it's a long-term investing strategy. I use the total market index, which is the total US market. It's everything. It's basically the Dow, the NASDAQ, the S&P, the Russell, and 3,800 other stocks. And then I look at this every single day. I update this daily. You can see it was done on Friday. And I put the indicators in of when I see that the market is getting ready to turn, either up or down. And you can see right here, the weekly, which is what this is all based on right now, is bull, 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 long, all the way across. And the indicator happened on May the 5th. So since May the 5th, it's up 5.8%. Now, in an IRA or a 401k, it's a better example, because 401ks, you don't have a lot of options, but you can move it to a bond fund or even to a money market cash fund. There are some limits of how often you can do that. Usually it's once every 30 days, but each one, Empower might have its own rules. But people that are following this basically just move it out of the bond fund and move it into an equity fund, an S&P, just an S&P index. Whenever this switches from cash to long, which happened on May the 5th, and they just watch this until it switches back to cash. And I don't know when that will be. You can actually look at the chart right here, and it will show you when these happen. So right now it's long. Right now it's probably going to take a little bit. If the market really goes down a lot next week, it could be next week. But essentially for roughly 2 months, they've had their money in an index fund. And then when the whole market starts to roll over, with a company like Empower, they'll put it into more defensive areas, but those will still go down. They just won't go down as much. In this case, you actually move it to cash. So your account either goes up and then sideways, and then up and then sideways. All right, so that's the whole idea of this strategy, is to try to avoid those big downtrends in the market. So it's another way that you could do it for things like Empower or Fidelity or 401ks, where you don't have a lot of options of what to do. You mentioned some other things. You have your own account?
No, it's all managed by Empower, but I have Roth IRAs and a brokerage also.
Oh, okay, I got you. Yeah.
Same
So you could do
thing.
the Roth IRA. You could use the same technique with in the Roth. It does take a little bit of your own management time to do it. One thing that I will say about annuities, because you mentioned you had annuities as well. Annuities, depending on what they are, can be good or bad. My recommendation is never annuitize an annuity. So you can have an annuity and it can make money for you, and there's different types of annuities. I actually have an annuity that does exactly the strategy that I just laid out. It keeps my money in the market when the market's going up. When the market starts to go down, it moves it to a cash account and it goes sideways. So it's up or sideways. But I will never annuitize that annuity. Annuitize means convert it to an income stream, right? So an annuity allows you to, when you choose, allows you to convert it to an income stream for the rest of your life. The downside of that is if you die the next day, that money, depending on how your annuity is set up, that money could disappear. The insurance company just keeps it. So it's gone if you annuitize. If it's in an annuity and you do not annuitize, do not turn it into an income stream, then you can keep that money as kind of a nest egg or safety account, something like that. My mother, who is 97 years old, has an annuity that has never annuitized. And we are slowly taking money out of it. We're basically creating her own income stream ourselves out of that money because we can control it. As soon as it annuitizes, we no longer can control what we do with that money. So that's just one little point about annuities. And there's lots of different kinds. So you have to really look at yours and study what they allow you to do and what they don't allow you to do. But in general, I would don't annuitize an annuity. Just keep it there.
Definitely won't.
Yeah, keep it there as a safety valve where you still can control it. If you annuitize it, it sounds really good. I've got an income for life, but inflation is going to eat away at that over time as well.
Very cool. Jason, you're good, yeah?
Yes, thank you very much.
Very cool, man. Thanks for doing this on your walk. All right, next symbol from Frank. We got ADI. Again, a symbol I don't know. ADI.
A, B as in boy?
Oh, D as in David.
Oh, ADI. Oh, okay. This is also one that has been on the top 10 list before. Let me see if it's there now. So I recognize that one. ATI is a steel company. Yeah, it's not on there this time, but in general, ADI is a pretty good company. It's been going up ever since the April bottom. By the way, April 7th, you'll notice on a lot of charts that I show, right. April 7th was the bottom. So lots of charts look really good since April 7th. And in general, it's still going higher and it looks pretty good. It's above all of its moving averages.
Would you call that a double top or no?
No, not yet. Not yet. It's getting up to probably around the 240 level. It will be the test for it. That could be the double top. It's actually rolling over right now, but it's still making higher highs and higher lows. That's the definition of an uptrend. So anytime you have a stock that's going down like this, so it's got a lower low and a lower high and then a lower low, what you want to watch for or look for is a higher high and a higher low, which is a change of character. So you've got a higher high right here and then another higher high right there. We've got a low right here, but we have not made a lower low. So what you would hope for in this case is for it, if we do get the downtrend next week, this likely will probably come back to the 200-day around 215. And then you have to see what it's going to do. If it breaks below this low right here, then it's changed its character again, and it's more of it's renewing a downtrend if it goes below this low right here.
Okay.
But overall, it looks pretty good. Semiconductors have been great lately. A lot of the semiconductors actually are doing pretty well. In fact, they were in this top 10 list for a couple of weeks. Here's the semiconductor industry group. You can see they actually right now are at a quadruple top.
Yeah, look at that.
So it's come up here 1, 2, 3, 4, 5, 6, 7. This is the 7th time it's been up at this level. So that is clearly resistance for semiconductors. So that whole group in general might probably participate in a downtrend if we get it, but we'll see how far down it comes. If this is just a temporary thing, and I think the end of June to middle of July is probably going to be a little bit of a rally, and then after July 15th, probably we're going to have a very choppy market. And markets can correct in two ways. They can correct either by price, so the price can come down to a particular level, or they can correct in time. So they can just stay at that level over an extended period of time before resuming an uptrend.
Got it.
So the best case, if we get that choppy market after July 15th, is for a correction in time until October. Market just doesn't go anywhere. It goes down, it goes up. So
very, very cool. All right, next stock. I knew we'd get this symbol, Tesla.
Tesla. I was just looking at Tesla, actually.
So there's two questions, but we'll look at the stock first.
There's Tesla right there. It's trying to rally, pull back, came down to the 50-day, came up, fails. So that's a failed breakout. That's a lower. So this is what I mean by a change of character. So now we have a lower high. It needs to break out of that in order for the uptrend to continue. But if it continues lower, then we're back here on the 50 to 200 day moving average. I want to look at this in a different way. This is my Thinkorswim account. And I actually covered this in Technical Tuesday last week. I did a very extensive session on momentum. And this actually is Tesla. So if you'll notice these little yellow arrows right here, this is something that John Carter created. John Carter is an amazing trader, and he creates his own indicators. He owns Simpler Trading. He created this new one that identifies momentum. So it basically means the stock is moving with a lot of volume, a lot of energy behind it in any particular directions. In this case, if it's yellow, it means the energy is to the downside. If it's blue, then the energy is to the upside. Now, what we have here is a daily chart on the left and a 30-minute chart on the right. So the one on the right is very short term. So on the daily, you can see there's a lot of yellow arrows, which means it has more downside momentum. So this is probably a critical place for Tesla right now. I would say it's neutral at this point. It's just kind of going sideways, trying to decide whether it's going to break out of this top up here or if it's going to break through the bottom. So I would say on Tesla, I'd say the jury is out. My sense is that it probably will go down with the market if the market goes down next week.
Well, let me ask you a different question. This is obviously all chart specific we've done yet. I'm curious, obviously one of the things you get with Tesla is you get lots of talk of the future. I think in Austin, they've just started robo-taxis. How do you kind of look at those bigger things as market moving, or as a chart guy, you don't look at the bigger picture?
So I don't necessarily look at the fundamentals themselves, but I do keep things like what a company, what their market is, what sector they're in. I like to do a top-down view, with what is the overall market doing, what's the sector doing, what's the industry group doing, and then what is the stock doing. So I do look at those types of things. And
but you're not looking at robo-taxis and Optimus and all these other things. It's just...
Yeah, I think, yes, I do. I keep that in mind with Tesla. But at the end of the day, everything related to a company is reflected in the price. Okay. So the general market, every investor out there that's looking in detail at all of those components that Tesla's talking about, that are doing the research, that might even be talking to the board at Tesla about what's going on.
Yep.
Every other investor, every hedge fund manager, every institution out there, they are all looking at all of that information. All of them. So they, I think, are much smarter than I am.
Yeah.
And as a result, whatever they are looking at is reflected in price.
It's fully priced in. That makes total sense.
Right.
Okay. All right, folks. We've got 3 more symbols. We're going to go through them.
I want to look at Tesla, by the way, on a monthly. So this is a much longer term. This goes all the way back to 2010 when they started. So from this perspective, it is in a sideways channel. It's consolidating right now. So if it were to break out of this 388 level, 390, then it likely is going to run quite a bit higher. In fact, it probably could run a lot higher. It could get to 1,000 if it can break out of this 388 level. So this is the key from a technical perspective for Tesla.
Again,
let's call
just to be clear, in
400.
case people don't see it, it's been in this channel for 4 years.
Yeah, that's right. It's been since the high right here was in 2021. So yeah, it's been in. This is a monthly. So each one of these bars represents 1 month. So it's been in there for 4 years in that channel. And I like to do this too. I like to look at different time frames. Look at monthly, which is very long term, and then look at a weekly. So the channel now is 400 is right here. It's actually getting close to it. It's a resistance level from back here and resistance right here. So it's probably going to have a hard time getting through, but it may bounce around maybe through the summer. And then once we get into the fall is where it really starts to take off. So I think best case for Tesla is that it maintains this channel, stays in this area. It actually, on this weekly chart, actually has an upward trend line.
Sure.
Right there. So in general, it's trying to move higher.
Got it. Okay.
So, but you know, with because of all those things, Tesla's not just the car anymore. And now that Elon's no longer working at the government, maybe people will stop firebombing his cars, which never really made any sense to me.
Yeah, it didn't make any sense.
Why they would do that.
Yeah. Okay. All right. Again, folks, we've only got 3 more symbols. You've got Dan until the questions go. If these 3 are the last 3, so be it. We'll go to Dennis first. MPH. M is in Michael, P is in Paul, W is in Which.
MP. W. Yeah.
There you go.
Medical properties. This is a REIT, specialty REIT.
Mm-hmm.
This is definitely in a downtrend. I mean, you can see it pretty clearly.
Yeah.
I actually color coded these.
Yeah.
Yeah, I think anybody can see that one. I color coded these. That's the 50-day moving average. The 21-day is the blue one, and I color coded them so when the blue,
it's even below the 200.
It's below the 200. Yeah, it's below everything basically. It's below all moving averages. So this one is likely to continue to go lower. The momentum is to the downside. This is a Keltner channel, so this basically shows you the one in the middle. The green lines are the average range that stock usually trades in one day. Actually, this is a daily. The blue one is 2 times the average range, and the red one is 3 times the average range. So it's very extreme when it gets to between the blue and the red, and even more extreme when it gets outside of the red. Right now, it's right in between the 1x and the 2x level, so it could potentially come down to 4.25. I think if it does get down there, right now it's at 441, so that's not very far to go. Right. I think if it does get there, it's probably going to have a reaction rally and will bounce back up again. But you'll notice what's happened before. It came down, it bounced to the 21, rejected, 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 rejected. So if it goes down and comes back up, it'll probably get rejected again at the 21, which is right now is at 465. Yeah. So we're somewhere around 450, 460.
Very cool. Like it. Next one up, we got T, which I think is AT&T, I think.
It is. AT&T actually is, if I go back to my top 10 list, there's AT&T. Top 10 S&P large caps. So of all of the S&P large cap stocks, you've seen Palantir is number 1. Mm-hmm. These are the top 10 for the week. And because it does not have an asterisk means it's brand new to the top 10 this week. And I just updated these yesterday morning. So AT&T has been on here for a while. So AT&T has been a really strong contender for a while. You can actually click on the chart right here. So there's AT&T. It is still looks strong. It is hitting up against a resistance line right there. It's right at it, but it's trending higher. So like that, it's actually getting right to a decision point right now. So I think AT&T in general looks like a really strong stock. I think those stocks, Verizon has been good. T-Mobile has been good. All of those have been good stocks. AT&T it's a old time telecom company, been around forever. It's got good good yield, 4% yield.
Yeah, not bad.
So it's really good if you like the dividend stocks. It's a good one for dividends. Right now, I think it's probably just going sideways. It's basically treading water. Think of it that way. Yeah. Treading water. If the rest of the market, comes down, it might get a little bit of a bounce in the beginning of July, and then this one probably will go sideways. The more it goes sideways, by the way, the more it will build up energy. Mm-hmm. And that energy is what creates momentum. So let's put T in here. So down here, you can barely see it, but these are all black dots down here. So this is the momentum indicator that John Carter created. If it's yellow, which is one little yellow one right there, this is on the daily chart. There's one little yellow one right here. That is extremely tight. That means, think of it as a spring, winding up, getting ready to explode, right? So yellow is the tightest, red is the medium, black is the loosest, and then green is there's really no sideways action. There's no buildup of energy.
Okay.
Right now, AT&T has been in a very long squeeze between the reds, yellows, and blacks, all the way back here to April, and I would even say even before that. Mm-hmm. So this thing is when it gets ready to move, you can see the channel that it's in. When it does finally move, it's going to explode probably one way or the other. This doesn't tell you which way it's going to go.
Yeah, could be up, could be down.
Just tells you that there's a lot of energy building up in this right now, and this one could, because of the dividend, could just continue to move sideways for quite a while.
Yeah, 4% dividends, no slouch. Okay,
and you could just make money on the dividend.
There you go. All right, we've got only 2 more to go, folks. Again, and we're going to go until you have more questions. Next up, Dan, is Grab. Grab. Grab.
Grab. This one I don't know. Software's been doing great. Grab Holdings. I have no idea what this one does. You know anything about this?
I do not. Now we're just going to look at the chart because we don't know what the company does.
Yeah. I mean, I do that all the time, by the way. If I find a good chart, I don't really care what the company does. Yeah. Because the price is already reflected in here. And to me, this is heading down pretty dramatically. Yeah. You can see it's basically keeps making.
Where's support on the downside? Is it the 200-day?
It's making lower highs, but I would put short-term support probably right around here. It's clearly right here at the 200-day, which is just about to hit it. So the 200-day is right down here at about, I'll tell you exactly where it is. 200-day is right at about 450. Yeah, and it's at 457. So it's likely going to go to the 200. And if the rest of the market goes lower, then it's probably going to break below the 200. And this will be a broken chart. Then the next support level is 420, call it 425 right down here. So if you're looking for a place to get into this, I would wait for probably around the 425 area, but I don't recommend waiting for a particular level and then buying it. I would prefer to see it bounce off of that level and start to move higher, which by definition means you will never get the absolute bottom and you'll never get the absolute top.
Yeah, but if you're trying to protect it, yeah.
Right. If you can participate in 80% of the move, you can make a lot of money.
Yep.
So, but this one to me looks like it's definitely headed lower. Just out of curiosity, I want to look at software. See what that chart looks like. So software's been doing really well. It's already broken out.
Yeah, so this is a negative divergence, right? It's doing worse than its peers.
Wouldn't really call it a negative divergence necessarily. I guess you could think of it that way. Divergence between the industry group and the stock.
Correct. That's what I was thinking.
You could kind of think of it as a negative divergence that way. But yeah, if the industry group is outperforming, which it clearly is, then you would expect the stock to outperform as well. This down here is the how it's doing versus the S&P. This is how software is doing versus the S&P, and the zero line is right down here. Yeah. So if it's above zero, that means it's outperforming the S&P, and software is definitely doing that. This is something that Investors Business Daily uses. So I have a chart in here that's almost the identical Investors Business Daily chart, and this is the IBD RS, what they call the RS, the relative strength line, which is nothing more than how's it doing versus the S&P. So you can see right here, just like I showed you, it's outperforming. Momentum is basically nothing. It's just going sideways. And this is true of everything in the market right now, by the way. All the charts that I'm looking at lately, and the index charts as well, through this whole uptrend right here, the momentum is practically nothing. So there's really not a lot of power pushing things up, which usually means it's going to be very easy to push it over.
Yeah.
And send it back to the downside.
Very cool. Next up, a quick comment with Frank, which is exactly why Dan's been on the channel for more than 4 years, I think 5 years now. Dan is a prime example of pick your lane and become elite at it.
Yeah.
Thank you for your time, Dan.
That's true. I'm not going to try to give you advice about real estate.
There you go. There you go. All right, we've got a couple more names here. We got Disney stock.
Disney dividend yield is only 1.7. So, it's an old time company. It's had a really nice run lately, sitting up here at 118. Let's go back like this. It's actually above the resistance. So that's good. Just pull back to the resistance level, which is right here at about right where it is, 117. So Disney, like everything else right now, is overextended. It's had a big, huge move upwards.
Yeah, it has.
That is not sustainable. The best thing that could happen for Disney is for it to pull back to around about the 21 day, which is at around 112, 113, and then continue its move higher. But this is a prime example of one that may just correct in time, not necessarily in price. So it just could
flat for a long time.
Yeah, just could move across here flat until the rest of the market starts to go back up, which I don't think will be till the fall.
Okay.
We might get a short rally in July, and then from the middle of July until October, I think the market's going to be very choppy. The best thing we can hope for is sideways.
Okay.
I don't think we're going back to the lows, by the way. I don't think we're going to go back to the April 7th lows.
Okay.
We could go back to the 200-day somewhere around in this area down here for the index and for individual stocks. And by the way, that could be a good opportunity as we move into the fall, which is typically historically the strongest period in the market. The key thing you have to practice with investing and trading is patience. So wait for the fatter pitch.
Yep. Yeah. Warren, you don't have to swing at everything. Yep.
Let the market come down. I mean, I will continue to report on the historical trends and where we're standing. And I do that with you on Sundays every week. And now I do it on my YouTube channel, which I will cover usually on the midday update. I will just cover what's happened that week. Where are we this week? Does it look like we're going to go higher or lower? And then now I'm doing Tuesday is Technical Tuesday, where I'll do teaching. And then Friday is a market recap for the whole week.
Beautiful. Next up, we got Cost, which I think is Costco.
What is it?
Cost, C-O-S-T.
Oh, Toast.
Oh, no.
This is a restaurant.
Cat. No, C as in cat.
Oh, Costco.
Yeah,
okay.
Costco.
Costco pulling back along with the market. Likely will pull back some more with the market. Costco, I think, is Costco right here. This is on my website. This is called the trend model. So it shows you the short-term, medium-term, long-term trend of these particular stocks and when they changed, when they flipped over. And the reason cost is on here, Costco, is because these top 10 are the top 10 in the NASDAQ 100. These are the top 10 holdings of the triple Qs. All right. Triple Qs is an ETF for the NASDAQ 100. So most of them you'll notice are all technology stocks.
Yeah.
But
except Costco.
Interestingly, Costco is one of those top 10. So that's why it's on this list. So it just flipped over on June 10th to a short-term down signal. And we can look at it on here as well. So right here, where the 5 went below the 21, that's a short-term down. If the 21, the blue one goes below the 50, the red one, and then this color will change like it did here, then that'll be a medium-term down signal. So right now, Costco is showing weakness along with the rest of the market, by the way. So it wouldn't surprise me for it to continue to trend lower. But again, I don't think we're going back to the April lows. So Costco is a really good company, not much of a dividend, but they are a great, very well managed company. So this is one that for a long-term investor, this is probably a good holding for the long term. If you're looking to get in to start a position with Costco, then what you probably should do is use the weekly chart and wait for it to pull back to a key moving average. You can see how it hit the 21. This is a weekly, by the way. So that's 21 weeks right there, where it keeps coming down to that level and bounces off it. Now, in this case, it came all the way down to the 50. But the 50-day down here is where big institutions like to add to their holdings. They can't take positions all in one day or even in 1 month. It can take them months to create a position in a particular holding. So if this is one of their key holdings, and since it's in the top 10 of the triple Qs, then it clearly should be, then they will wait. They will buy some and they'll wait for a pullback. So watch for that 21. It's actually right there right now. So it might actually drop a little lower. But the 50-day is at 937. Let's call it 940. And the 21-day is at 983. So if you're looking for an entry, we're going into the weakest part of the market right now. So always keep that in the back of your mind. Doesn't mean we have to go down. Market can do anything that it wants. Just means that historically, over a 40-year period, the market typically has gone down. So Costco could participate in that as well. So I would look for it bouncing and starting to move higher. In fact, if you look for a green, well, if you're using my charts, I like to look for a green bar before I get in.
Yeah. Okay.
These are basically momentum bars. The green means both momentum and trend is higher. The red means both momentum and trend is lower. And the blue means it's just neutral. That one of those is not the same as the other. It's just a neutral bar. So ideally, I like to see neutral as it comes down to a key moving average line, and then a green one, which happened right here. I'll show you. So there's the green one right there. So that would be the entry. Even if you were already in Costco and you wanted to add more to it, wait for, see when it starts, blue starts to pull back. There's a green one right there. Right over here, there's a green one right there after blues and reds. These are blues. There's a green one right there. So right now we've got a blue and a red. So I would wait until you see a green. We might get some more pullback along with the market. But Costco's a good stock for the long term. For a long-term holder, I don't think you can go wrong having that in your portfolio.
Very, very cool. We've got something from Jason. Doge. I didn't even know that was a stock symbol. DOGE. Is that really a company?
I don't know. I think it's no, Doge is a Bitcoin, I think.
Oh, okay. All right. Oh,
Yeah,
no. It's crypto.
Crypto. Yeah, it's a sorry, not Bitcoin, crypto.
Yeah.
I don't know if I can.
You're not going to see that. All right. We don't play
See.
crypto
Wait,
on this show.
hang on.
I don't want to talk altcoins, man.
Here we go. Hold on. I got it.
All right. All right.
There's Doge. That is an ugly chart.
Yeah.
So it looks to me, I'm going to do something. Bear with me for a second. I want to see how this compares with Bitcoin.
Oh, you're going to do a comparison.
So let's put Bitcoin on the same chart. And put it behind the price. And let's make it pink so we can see it. Oops.
I'm going to guess Bitcoin did better.
I would say it probably did, but it'll be a good comparison.
Yeah, I like it. This is what happens when you're elite at something. You can just do it on the fly.
No, that's not what I want. I'm looking at the wrong thing here. Down here, Bitcoin. Make this one solid, thick line and make it pink. All right, so there's Bitcoin in the pink. There's Doge. So you can see it is not following along with Bitcoin. It was for a while. It was pretty well correlated, actually, with Bitcoin.
For quite a while, yeah, until what?
Bitcoin started moving up here. Doge moved up. And then right in this period, in May, actually, Bitcoin went higher, but there is a negative divergence right there. Bitcoin went higher and Doge went lower. Now Bitcoin is basically going sideways and Doge is actually going even lower.
Got it.
So I would say it's probably going to continue to go lower. If you wanted to look for an entry, I don't know what the situation is, but if you were looking for an entry on this, I would probably do it. Let me see if I can show you this. I'm going to zoom in on this a little bit more. So you see it's below all of its moving averages right now. The pink one is a 5-day and the orange one is a 10-day. So when the pink one goes above the orange one, when the 5-day goes above the 10-day, then it's beginning the start of an uptrend. That a lot of times is the best place to get in. So it happened right back here. And you can see what happened after that. And it went the opposite way. The pink crossed below the orange one right here. So that was your signal to get out.
So wait for the signal for the 5-day to go above the 10 is your advice.
Yeah, wait for a confirmation that it's moving higher if you want to get in or add to your position. If you want to get out, you should have done it back here, but right now it's probably too late. Might as well just hang on to it because it will turn back up at some point. Yep. But now it's starting to bounce off the 21, so it may not make it past the 21 next time.
Gotcha. All right, guys, we've only got 2 more to go. So again, if you wanted to get in your last minute stocks, get it in there. We're going to go to Lars next. He has Zion's Bank, and actually request, Dan, if you look at it from a year view, please.
Okay. What's the symbol?
I'm going to guess it's ZION.
Yep. Yeah. Zion. So this is a year right here. So it hitting the 200 days. So it hit it there and it just about hit it there. It's getting rejected. So the trend is lower for this. It made it all the way up there. It is in the banks industry group. And I'm going to try something. Let's do kind of the same thing. Put a price on here. And this time I want to look at, I think it's in KRE. Put it behind price and make it a solid thick bar and pink. Okay, so this is the banking ETF, KRE. And you can see it's pretty much correlating with the banking group, right? Okay. So it looks like these are all rolling over. The basic trend is down from way back here. There's the top.
And it's down not only for Zion, it's down for the industry.
It's down for the whole, for the whole banking industry. Yes. That's what that pink line tells you.
Right.
So it's not just this bank, but it's basically following the rest of the industry. So it probably won't recover until the banking industry recovers. Which it started to down here and had a nice run. It's still above the uptrend. Now it's actually below the uptrend line. So it just now went below this uptrend line. So the 50-day down here is probably the next stop for it. At about 46.
All right.
And again, if you're looking for an entry, then that could be 46 could be a good one. However, don't buy it just because it gets to 46.
Right.
Make sure it confirms that it's starting to go back higher again.
Okay.
But the whole banking industry, one thing I have on my website, it's called a market bias matrix, which is reflected in this chart over here. These are all the asset groups in the market: indexes, sectors, industries, intermarket relationships, commodities, metals, and currencies on a short-term, medium-term, and long-term basis. And whenever they get a signal, they turn from bull to bear or bear to bull. And if it happens on that day, so these all happened on Friday, these got bullish signals. There were no bullish signals on Friday. These are all bearish over here. And KRE and KBE are on here. So KRE is regional banks. And you can see it just got a bearish signal right here. The banking one has not yet, but it probably will soon. I can actually look at it. These are larger banks, yeah. So this pink one, when it
coming.
crosses the 21, that'll probably happen on Monday. So this will get a short-term signal as well.
All right. Next up,
So again, this is probably going down to that 50-day, and Zion will probably reflect what the rest of the industry group does.
Sounds good. Next up, we have RKLB. B as in boy.
Rocket Lab.
Yeah, Rocket. Yeah, you had a T there. R. There you go.
Rocket Lab has been a pretty good stock. It was actually in the top 10 lists. You can see right here. It was in the top 10 list for quite a while.
Look at that run.
I don't think it's there this week. Let me see. But for those that are subscribers, if you do nothing else but come over here on the weekend before the market opens and just look at the ones that have asterisks. Those are the new ones that have just made it to these lists. So Palantir was new to the relative outperformers, but it's been on the IBD list before. Rocket Lab was on this list for quite a while, actually. It's not there this week, but it was on that list for quite a while. And if you want a group of stocks to either trade or watch, put in a watch list, I put all of the ones that had previously been on these top 10 lists in the past, because even if they fall off, they're still good lists. I mean, still good stocks. You know, Cloudflare was on it last week, but it fell out of the top 10, and I think it's number 12 or something. So I created a CSV file, which gets updated every weekend, and you can just download that into any trading platform if you want to. So these are usually the best of the best stocks. And Rocket Lab was on that list. You can see right here. You can hopefully now you're starting to pick these out on your own pretty quickly. There's a triple top on this one. Right about there. So hit it here. These people want to break even. These people want to break even. There is potentially a cup and handle, which I covered in my Technical Tuesdays on patterns. This is a favorite one for Investors Business Daily. There's a cup, and here's the handle right there. And in this case, it still could be a handle, but I might even call it a failed handle. So again, this is a visual representation of market psychology. So stock had a really good run, went up here, profit taking happened, it went down, these people got trapped, they want to get out at break even, came back up, they started selling, went back down a little. So these are the ones that are selling, all these people that want to break even, that's them right here. It creates a handle when there are still strength in the stock and there still are buyers that are going to overcome these break even people, and that pushes it back up again. But in order for it to be valid, it has to break out of this resistance level. And if it does, and everybody knows about cup and handles, everyone that's traders, Investors Business Daily, they talk about it all the time, and they say if it breaks out, then the entry point is up here around 33, 34, somewhere right there. So all of these people watching this pattern will put their buy orders right up here at 33, because it's not valid until it breaks out. And of course, all the people that were shorting back here, they start to feel pain when it gets above their short level. So they put their exit orders up here too. And an exit for a short is a buy order. So now you got the people that want to get in, and you got the shorts that want to get out, all that have buy orders sitting up here around 33 and 34. But it hasn't broken out yet. Yep. All right. So now it's getting rejected. So we'll have to watch it. It's going into the weakest part of the year, so this might go down a little bit more. But this is one worth watching. This is the kind of stock, if you want to get into something like this, because it's been so strong for quite a while and likely will continue. It's an aerospace, which has been a strong industry group. Then wait and watch what happens if it starts to come back up again. It probably will break through the next time, especially if we get more into the stronger part of the year, or it could just bounce a couple of times off of this. But that's where I would put the entry, is when it breaks out. Now, a lot of people will think, well, why would I put an entry where higher than where it is? I want to buy it when it's lower, which you certainly can do that. There's just more risk when that happens. And the way to measure what the move would be, if it breaks out and all of these buy orders that are sitting up there execute, is you take the distance from where the resistance level is to where the bottom of the cup is. Let's call it about 16. And this one up here is at about 30. Actually, yeah, about almost 31. So that's 15 points. So it should go 15 points higher. So 31 plus 15 is 46. So the breakout, if you get it at 34, you're likely going to go to 46 once it breaks out. That's called a measured move. And I covered all of this on the Technical Tuesday on patterns.
Very cool. One that I missed earlier, James, sorry, it was not intentional. I just missed it, was CBL, Cat, Bob, Larry.
CBL is a real estate, a REIT. Yeah, this one is just kind of bouncing along sideways. This is building up energy, by the way. One of my charts down here actually shows the energy. So whenever you see this bright green right here, that's the energy that it's building up. It actually came back down and is still moving sideways. So this is building up a lot of energy right now. So this one could break out, but it's going to take a lot for it to do that. It had a really good run back here. I'm not sure what kind of REITs they're involved with. I think they're retail REITs. So I think it's malls and things like that.
Yeah, malls, yeah.
CBL and Associates. So this probably is going to be very much economy related and consumer related. Mm-hmm. So if the consumer weakens, then this will probably weaken along with it. Yep. Right. Okay. So right now the areas to watch are right around 25 and on the downside around 23. And if it breaks below 23, it's at 24.41 right now, then it likely is going back to the lows down here around 21. Okay. So this is one that I think, based on the business that they're in, if the economy weakens, if the consumer weakens, if we do head into a recession, this is one that probably will suffer as a result.
Yeah. All right. Next up, one I'm actually surprised it took so long to get to, Nvidia.
Nvidia. Everyone's favorite.
Yeah.
Oh, look at that. Look at that. You would think Nvidia had been doing really well, which it has been doing really well. But there's resistance right there. There's 1, 2, 3, 4 times rejected. You could probably put a line right there, which is right about where it is. When it came up here, it went back down. So this is a critical point. Nvidia is a leader in semiconductors. So as Nvidia goes, so will semiconductors. Mm-hmm. So Nvidia needs to continue to move higher for all the rest of the semis to do well. Right now, it's actually had a really nice run. And again, this is a parabolic move. So this should not be expected to continue. The next earnings is until August 27th. Yeah. So this is one likely that will, be a correction in time, sideways move for a while. So you can add to a position if you wanted to. If it's moving sideways, you could wait for it to pull back a little bit to a key level, like the 21 or even the 200 down here, about 128, 130, roughly, and then add to positions here. This is not one that I would take a new position in now. I would not do that now. Nvidia typically runs up about 3 weeks before earnings, and earnings were on May 28th right here. You can see that black candle right there. So you can see the move right here from the beginning of May right into earnings. So sometime around the beginning of August, which is going to be right in the heart of the weakest part of the year. But that's the point where Nvidia will start to make its move into earnings.
All right. Next up, we got Ford. F, I think it's a symbol.
Ford just seems to not want to do anything. Look at that. I wonder what Ford looks like on this one. I'm looking for the squeeze down here. So we've got black. There's greens there, so it came out of the squeeze. But then we got reds, blacks, all the way back through here. So Ford is building up energy, but Ford really hasn't gone anywhere. I don't know. This is one the earnings yield is 11.5%. So this is a great dividend stock. But we go back.
If it keeps paying it, sometimes you got to be.
Well, yeah, but I don't really see that Ford's going to go out of business. I don't think
but they could cut the dividend.
They could cut, yeah. Not sure if they're on the. I don't know if they're on the dividend aristocrats or not. Dividend aristocrats are companies that have paid dividends, paid or increased dividends every year for 25 years straight. And
I'm going to guess they're not on the aristocrats.
They may not be. I don't know what their dividend looks like, but 11.5% is pretty good. This is if you want to play a really long-term, fairly safe company. I don't think Ford's going out of business. If you want to just play it for the dividend, for the income, put money here and just ride it and get paid the dividend, 11.5%. I think that's probably a solid strategy. Look at that over. This goes back to 2006. This is definitely not a growth stock.
No, not a growth stock.
Right. So you're not gonna make a lot of money investing in the stock. If you wanted to try to trade it, I wouldn't really recommend it because it just doesn't have enough volatility.
Yeah, it doesn't move. Yeah.
Probably not a good one for options either because there's not much volatility. But the best thing about Ford is probably that dividend.
Yeah,
you can just get into it and just make the dividend over time.
Yeah, very cool.
And you can sell covered calls too, which I did a whole technical Tuesday on covered calls as well. This would probably be a good one for that. So you can make money on the dividend and you can make money on the covered calls and just keep the stock forever.
There you go. All right, next we got Walmart. I think that's what that is. W-A-T.
I got another one that I'm surprised no one's asked about yet.
All right, we'll go that one.
Here's Walmart. Walmart, another good company. Not much of a dividend. 1% yield. It's kind of trading in the middle of its range right now. It's actually coming down off of its range. So Walmart's a good company. I don't really think they're not going anywhere. So this is one that probably is going to move along with the rest of the market. So if the market declines, it's probably going to trend downwards, but I don't think it's going to have a big, huge sell-off. It's not going to crash. Yeah. Maybe down to the 200. It did it right here in April during this long downtrend, but I don't think we're going back to the April 7th lows. So we could get down here to the 200-day right around 90. Maybe, over the summer, the end of the summer, start to move higher again.
Very cool. All right, next up, actually, why don't you do the one that you were surprised nobody asked?
UNH.
Oh, United Health Group. Oh.
United Health Group.
They've been in the news a little bit.
Look at that. That's an ugly chart.
Yeah, you think?
So this is I call this a Warren Buffett kind of stock.
Seriously? Really? Why? Tell me what does that mean?
Yeah, Warren Buffett is a value investor.
Oh, okay.
Value investors, by definition, are buying stocks that are beaten up. Good companies that are beaten up.
Yep, that's true.
Right? That's value investing. So he probably was watching it here, and then it dropped to here, and then it dropped all the way down here. Now, notice that big red candle right there? Mm-hmm. Can you see that?
Yeah, of course. Yep.
Make it bigger?
No, we can see it. Oh, where'd it go? There it is.
So that is it's called a hammer. And I did a whole session on candles too on Technical Tuesday. So you see what happened right here. It had a big decline. This is all in one day. It gapped down, went all the way down to here, and by the end of the day was all the way back to where it opened.
Yep.
So these are all value investors and probably shorts covering as well.
Yeah.
But these are all value investors that are just frothing at the mouth that a company like United Healthcare could be selling that low.
Does it have a dividend?
Oh yeah.
Oh, 2%.
2.68. It's reasonable.
Yeah, it's more than
reasonable dividend. Yeah. So this is one that I think I mentioned on your channel. I actually bought it for my long-term portfolio.
Yeah, you did. I was going to follow up. Yeah.
Right. So I bought it I initially bought it at 292. Let's see if I can. 292 is right there. So right here, when it pulled back right there, right there. Let me zoom in a little bit on this. All right, so I bought right here on this pullback. And then it moved up, came back down, and I have been selling covered calls on this now since then.
So
every
again,
week.
I want to be clear. Usually on my channel, you're a trader. I want to be clear.
Yeah.
This is one you're calling an investment.
This is an investment. This is one that I'm not going to trade. I'm not going to hang on to it if it drops down below 280 or so.
Right.
I'm not going to do that. So from that perspective, you might call me a trader, but it's not one I'm going to sell just because it goes up a little bit. This is one that I'm just going to hold because it could potentially get all the way back up here somewhere. Now it could take years for that to happen, but still, what I'm doing, and I did a whole covered call session on Technical Tuesday. I'm selling covered calls on this. So I sold, and they have, it has really good weekly options. So last week I sold a covered call for $1.70 that expired on Friday.
Nice.
And the strike price was $3.15. You see the price that it expired at.
Yes,
$3.13.
Expired worthless.
Expired worthless. So I kept my $1.71 premium, and I kept the stock.
Yep.
All right. And then I sold another one that expires this coming Friday for $3.20. A little higher up. And that one was $2.50.
Very nice.
So $2.50 and $1.70 is $4.20,
whatever,
roughly.
Yeah, something like that. Yep.
So you can subtract basically $4 off of that $2.92. So my basis right now is $2.88. Sorry. My basis now is down here at about $2.88.
Nice. Okay.
All right.
And again, they can go to your channel to get all these Technical Tuesdays.
Yes, every Tuesday I will do, and they're all in a playlist, so you can go back and review them. I've got one that I did back in December on Bitcoin. I explained everything about Bitcoin, how it was created, what the halving means, everything that you would ever want to know about Bitcoin is out there. But what this does every week, I will sell a covered call. I'm just basically being like the insurance company.
Yep.
As long as the house doesn't burn down, I keep the premium, and I charge you next year another premium.
There you go.
Right. In this case, I'm doing it every week. So every week I make roughly another $2, keep pushing my basis down lower and lower. So, and I keep the stock.
Perfect. Okay. All right. I want to make sure we talk about your thoughts on the S&P 500. I think as of right now, your general opinion is we have a little bit of chop kind of roughly the mid-year, but you're thinking by the end of the year, there's a good chance for record highs. Is that where you kind of sit right now?
Yes, that's right. Was there another stock that somebody had?
There's one more to do.
Okay.
They want you to go ahead.
All right. This is the January barometer or the Santa rally that I covered last year. This vertical line is January 1st. And the January barometer says that if 2 out of these 3 are positive, then the market, the index will end higher for the year. Doesn't say how much higher, it just says it will end higher. All right. So we had the first one, the Santa rally, the last 5 days and the first 2 days was negative. First 5 days of the new year was positive, and the full month of January was positive, which implies that the end of the year will be higher. And here's where we are right now. Now, if you looked at this back here in April, you would have said there's no way the market's going to be higher, right?
Yeah.
But we are almost back there. So we're going to go through a choppy period over the summertime. But the market is bullish. We are in a secular bull market, which is going to last for another 4-5 years, something like that. So if we get downtrends like this, these are cyclical in nature, which means temporary. The market will come back and it will continue to go higher. I think we will be above 6,100, 6,147 is the high right there. I think we may be up to about 6,200 by the end of this year, and much higher in the next 2 or 3 years. So in general, that's where I think the market is headed.
Very cool. Well,
but we're going to have a challenging summer.
Yeah, you've been very clear. Summer's challenging. Chop, chop, chop. Very clear.
Yeah.
All right. The last one's just a comparison between USB and Zion. Could you compare those two over a year?
That's a really interesting question. So let me do a gallery view. This is stock charts, by the way. Anybody that wants to subscribe, this is what I use for all of my charts on my site. And I actually have scans that people can download and things like that. So USB and Zion.
Yep.
We're going to look at these side by side.
Mm-hmm.
So here's an intraday view. So this is a 10-minute view.
Kind of similar, yeah?
They look almost identical, actually, right?
I would have almost thought they were the same stock.
I know, right?
And Zion on his right, USB is on the left in case people not.
No, yeah, USB is on the left over here. Zion, oops, didn't mean to do that. So that's the intraday. Now we'll look at a daily view.
Similar.
Looks like the same stock, doesn't it?
It sure does.
In fact, interestingly, US Bank Corp over here hit the 200-day twice. Zion almost hit it, but still the resistance levels are almost identical. I will say that US Bank went a little bit above its previous resistance where Zion did not. So from that perspective, I would give the edge to US Bank a little bit. But in general, they look almost identical. Now, this blue area is how are they doing versus their industry group, the banking group.
Right.
So over here, this is US Bank, and you can see the zero line. So if it's below zero over this period is looks like 6 months. 1, 2, 3, 4, 5. Yeah, 6 months. Over a 6-month period, they're both underperforming the banking group. And they both look pretty much the same. Now, if we look at a weekly view, longer term, again, you can hardly distinguish between the two.
Yep. Okay.
I will say that US Bank is above the zero line for momentum, and Zion just barely got above it. So US Bank, I would give the edge to a little bit on the longer term. But again, they look almost identical.
That was freaky. They almost look the same.
Yeah, they almost look the same. We can do the same thing with Zion and KRE. So this is the banking ETF. This is regional banking ETF on the left-hand side and Zion on the right. And again, they look pretty much identical. Yeah. So they're going to follow the group, basically.
Well, Dan, this has been a lot of fun. I appreciate you going into this. Thank you for the conversation. Show your website one more time where people need to go. They get a lot of free stuff, the YouTube channel link, all that stuff. Let's wrap this up.
You two here, breakpointtrading.net. The newsletter is right in this little box right here. If you click on it, you'll go to the newsletter. Oh, I do want to show you something.
Oh, go for it.
This will be a good way to close it out, actually. Nice. So I've got these cartoons on here. But let's look at this. This one actually is not a cartoon, but this is, I think, very good advice. Okay. Don't be car poor.
Oh, yeah.
Sam and Sarah both have $10,000 in cash to buy a car. Sam buys an $80,000 car with a 72-month loan, paying $1,227 a month. In 6 years, Sam has an old car. Sarah buys a used car for $10,000 in cash and invests $1,227 per month in index funds. 6 years, Sarah has $124,000 and an old car. Same as
Go,
Sam.
Sarah. Yeah.
So don't go out and buy expensive stuff. Buy assets instead.
Yes, folks. Inflation is a feature, not a bug. Buy assets. You only need a decade of sacrifice, discretionary income to build wealth. You can have it. Guys, you're amazing. Dan, one more time, happy Father's Day. Happy Father's Day to everybody. Peace.
Same to you. Take care.
Later.